Hi class. In this video we're going to look at some examples from chapter 10. So I just picked out a few that were either tricky or similar to most of the other ones. So this one says the monthly salaries for December and the year-to-date earnings of the employees at Bush Consulting Company as of November 30th follow. It says determine the amount of Social Security tax to be withheld, assume a 6.2% Social Security tax and an earnings base of $122,700 for the year. So that comment about the earnings base, that means that once an employee reaches that amount of earnings for 1 year, their earnings are no longer subject to Social Security. And that's part of the reason I wanted to look at this one, because it's a little bit different. So we've got employee number 1 says he has earnings for January through November of $99,800 and then December earnings of $10,700. So his for his Social Security to be taxed, or for his salaries to be taxable, he has to be below $122,700. He had almost 100,000 plus about 11, so he's under the 122,000. So his entire, he or she, whichever, their whole salary is taxable for Social Security. So Social Security taxable earnings are $10,700. And then you're going to take that $10,700 and multiply it by 6.2%. So I get $663.40 if I did my math right. Let's make sure. So that's just the process you're going to go through. There was one I wanted to look at because one of these people, I think it probably would just be one on yours too, actually hits that earnings base, and so they're not completely taxable for Social Security. So this one says they had $115,000 in earnings and they made over $10,000, so that's over $122,700. So let's just see how much they've made. So if we take the $115,720, we add the $10,520, they've actually made $126,240. Okay, only $122,700 of that's taxable, so we have to stop when we get to the $122,700. So let's do it this way because I think it's easier. So let's take the earnings base of $122,700, which is the total amount that's taxable, and subtract the $115,720 because they've already been taxed on that. So if they can only be taxed on $122,700 and they've already been taxed on this previous amount, that leaves them $6,980 that they still can pay tax on, and then they reach that limit where they don't have to pay Social Security taxes anymore. So $6,980 is all. Oops, I'm sorry, I'm on the wrong line. $6,980 is the only part of this $10,520 that they've earned that can be taxed. The rest of it is non-taxable. So you're going to take the $6,980 times 6.2%, and I get $432.76. So let's just check, make sure I did my work right. Yeah. So most of them are going to be however much they made times 6.2%. But if any of them hit that $122,000, then you have to figure out what portion of their earnings is actually taxable, because it's probably not all going to be taxable if they're way up there in their salaries. All right, I'm not going to do the other two because that's pretty straightforward. We're going to go to a different problem. All right, so on this one it says we're on July 31st, we've got a payroll register with some totals, and we've got gross earnings, Social Security tax, Medicare tax, income tax, net amount due. And then it says of the gross amount, some of it was for office salaries. So it says use the general journal entry to prepare the monthly payroll for the month of July. All right. So let's see. They said some of those salaries were for office salaries. Did they say? Didn't say what the others were, so I'm gonna maybe think probably sales. Let's see if they got a sales. Yeah, I bet that's what it is. All right. So when we do this journal entry, when we record, where it says record the monthly payroll. So we're going to record almost like what you see on your paycheck stub when you get paid. So think about your paycheck stub. It probably says you earn gross amount of whatever it is. And then it says, but you didn't get that much because we kept out all these taxes and whatever. So you only got the net amount, which is always much sadder than the gross amount. So that's kind of how this journal entry goes. We're going to record the gross amount. Then we're going to record all the stuff that we kept out of employee paychecks. And the last thing we're going to record is the net amount, which is what we're going to pay the employees. So it says we kept out Social Security, Medicare, and income tax. So there was 3 things we kept out. So we've got Social Security, and that's a payable because we actually have to pay that into the government entity. Same with Medicare and employee income tax payable. All right, so and then the last thing we're going to do is put in the net pay, and the net pay is what goes to the employees. So that's salaries payable. So we start out with the expense, and then we have all these debts associated with the expense. So gross pay, deduction, 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 net pay. And so now let's get our amounts. So our gross earnings were $37,900, but it said, oh, there it says, $30,068.46 was for sales and $7,831.54 was for salary. So we're going to take these 2 amounts and put it in the expense line. So $30,068.46. That was sales and office $78,31.54. All right, so there's their gross amount. Now we're going to put on all these payable amounts. So Social Security was $23,49.80. Medicare $549.55. Income tax payable $3,000.55. And then we've got salaries payable. So we've got to figure that out. So we're going to take our debits and subtract our credits. It's like $32,000.10. If I can do math today, let's see. All right, so that's just how that's going to look. I just wanted to kind of go over the format of the journal entry, and that one's finished. So let's look at one more. This one says City Place Movie Theaters has 4 employees, pays them on an hourly basis. They've got some hours shown below, and all of this information we have to have for withholding allowances, cumulative earnings, blah blah blah. So it says we have several requirements. I'm a bit puzzled as to why it starts with requirement 2, but whatever. So we'll compute the regular overtime and gross earnings and put those in the payroll register. We're computing the taxes, blah, blah, blah. So we're not going to do everybody, but I'll show you kind of just how to go through this process. So here's our payroll register. Let's look at Andy Anderson. So his regular earnings, it's like he worked 47 hours. So he worked 40 hours at regular pay, 7 hours at overtime pay. Oh, it doesn't ask for the numbers, it asks for the amount. So we're going to take the $11.90, which is his hourly rate, times 40 hours, and that gives us his regular pay, which is $476. And his overtime pay is $11.90 times 1.5. That's time and a half. So $11.90 times 1.5 says he gets paid $17.85 an hour when he works overtime. So we're going to take that $17.85 times the overtime hours, which is 7 hours. Yeah, I know. And that goes here, $124.95. So his gross amount should be the total of those two, $476 and $124.95, $600.95. Let me make sure I did my math right before we go on, or the whole rest of the thing will be wrong. And it says it is. All right, here's a box for cumulative earnings, which it probably gave us, $17,560. That was up to this point. So I would say they wanted the $17,560 plus what he earned this time. So I'm going to take that and add the $600.95. So at this point, his cumulative earnings are $18,160.95. Let me just make sure that it takes that, because it's kind of an odd way to term it. All right, it does. All right, so let's whittle this down piece by piece. We've got a section here that says taxable wages, and it's got 2 columns in it, Social Security and Medicare. So most likely your taxable wages are going to be your gross wages. The only time it wouldn't be is if your cumulative earnings have hit the wage base of $122,700, and in that case your Social Security tax might not be your gross amount. But your Medicare should always be your gross amount, because Medicare does not have a wage base. It doesn't matter how much you make. If you make $1 million, you got to pay that Medicare. But then in this case, he's way below the $122,700. So his gross amount is taxable for Social Security and Medicare. Let me scoot over a little bit. All right. So then we have this section that says deductions. It says Social Security, Medicare, and income tax. So in the instructions, it says 6.2% for Social Security. Medicare is 1.45. It probably, oh yeah, up here it is, 1.45%. So take your taxable wages for Social Security, which are $600.95, and multiply that by 6.2%, and your Social Security taxes are $37.26. Medicare, you can take your taxable wages for Medicare, which is $600.95, times 1.45%. Medicare is $8.71. And then income tax, I think it gave us a chart. Yeah. It says use the tax tables here to enter the figures in the payroll register, and we actually have 2 charts. So it looks like Andy is married and he has 1 allowance. So we got to figure out which of these charts to use. So let's just open one. And this one says it's for single people, so that's the wrong chart. So we have to open the other one. This one says it's for married, so we need to use the married chart. He has 1 allowance, and he made $600 and some odd cents. So we're going to go down through this column until we hit $600 to $610. Looks like where it falls. So it looks like $45 is his federal. Oops. Transpose my numbers. All right, I got to slide that over a little bit. All right, so then we have a net amount. So the net amount is the gross amount of $600.95, just over here, minus all your deductions. So minus Social Security of $37.26, minus your Medicare of $8.71, and minus your $45 of federal income tax. So your net amount, which is what you're going to pay him, is $509.98. Scoot over a little bit more. All right, so then that's the net amount. The wages expense is actually the gross amount. That's what it cost the company, $600.95. It cost them that much to pay him. They're just taking some of that money and sending it into the government for his taxes, but they still cost them that much money. So yours should look something like this. And you're going to go through the same process for every person. The General Journal says record the payroll expense and summarize the payment of the payroll for the week ended June 30th and July 3rd. Did we have 2 weeks? Well, that's a little confusing. I think they want us to summarize the payroll on June the 30th, and then on July the 3rd is actually when they're paying their tax. That's very unclear. Oh, yeah, here it is up here. All right, so to do that, we're summarizing the payroll in the first entry. So we're going to use the payroll register to do that. And we won't have the amounts because I didn't fill out everybody's every line, but you're going to go through the same process for those 4 people, and you can see how they're kind of totaling here at the bottom. So basically what we're going to be left with is gross pay, which is here is our wages expense. We're going to have all these deductions and then a net pay. So that's the format of that journal entry. It would be so nice if this showed on one screen without having to scroll. All right, so our wages expense is the gross amount. The next thing you're going to do is record your deductions, and we had 3. We had Social Security, not sales tax, Social Security tax payable, Medicare tax payable, and employee income tax payable. And then you have the net amount, which is salaries payable. Oh, wages payable, same thing, they're just calling there something else. So basically you have your gross amount, deduction, 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 net amount. So this one too, kind of, if you think about your payroll check stub, it's going to kind of look like that. It has a gross amount, all this stuff they're keeping out of your paycheck, and then the net amount. And the amounts, expenses are debited, liabilities are credited, and all these are liabilities. You have one debit, the rest are credited, and every one of those amounts is going to come from your payroll register that you did in step 1. They're all going to come from these bottom lines. So here's going to be your Social Security total, Medicare total, income tax total, and you'll actually have the net amount total, and then there's the gross amount total. And then the analyze, something about Andy Anderson. What are Andy Anderson's cumulative earnings on June the 30th, 2019? We can actually answer that one because since I started out with him, his cumulative earnings are $18,160.95. It comes out of this cumulative earnings category. So that's kind of how you're going to do this chapter. Things should go a little easier for you because it's very repetitive. Journal entries look pretty much the same. As long as you can remember those salary bases for Social Security and stops tax and Social Security at the wage base. Make sure you put your decimal in the right spot. 1.45% is 0.0145 if you want to do it that way. 6.2% is 0.062. So anyway, if you have any questions, always feel free to call me and I'll try to help, or send me an email. That's the best.